We had a 1 and a 2, we had a 3, 4. We're just getting 5 into this yellow 5. It's done a 1 and a 2. It's suddenly going to be doing a 3 and a 4 and a 5. We're going to equate with 99,000. We're going to equate with the level 102,000. We are going to attack the neckline, severely attack the neckline. And this is something that goes all the way down here. At least that's our bias. All right. We have, of course, traction on the 4 hours to support this. We do not have any kind of momentum that is bullish traction to take the market higher. So this is not bullish momentum. This is, of course, flatter momentum. Understandable that we are rejecting level 3. So I can. All right. So the best would be to take a short. I believe. Just a moment. All right. Very clear now. What we would consider to do. We're just shorting the level 3. You're shorting shoulder levels in a level 3. What we are going to be doing is shorting shoulder levels in a level 3. I'm shorting this level. Now, there could be a bit of trickiness here because we have a leading diagonal, we have a wedge. The wedge is showing in white, and the leading diagonal is showing in yellow. If we have a 1 and a 2 and a 3, we could actually reject at 100. Reject at 113, 113, 300 is showing here. All right, very likely because I believe 2C is really not finished. And it could be a 4E, and so this is a 4E, of course, a 4B, and then we have an A, B, and a C. You see that A, that B, we have a C. I think we are going there. Well, that's why we're having the 3, 4, and a 5, but we're using now dot 1, dot 2, dot 3. We get that 3 up here. I doubt that we have 4, and I doubt that we have 5. Let's understand this more. 113 is a key resistance. It was showing on our own analysis. $113,300. Of course, this one isn't 113. Level 3 isn't really 113. But somehow here it shows level 1. So there's a measure, and there apparently is internally. This is a 2-hour chart. Maybe on the minutes we'll get as high as 113. So we can get 112,500. It appears to be a pivot level. Also, 114,000 is showing here. It's possible we are going to get a shoulder into similar to these formations before we have continuation to the downside. 113. So let's take it now to trade management. This is what we're seeing right now when we go live. Remember, here they're labeled into a 3, a 4, and a 5. 3 is at 107,300, where we really are. The same 1, 2, 3, 4, and 5s. 113,800. You could call it a 4A, 4B, and 4C, and we move higher. You could call it high degree 3. We have a high degree 4 in red, and we're going to get a high degree 5. Here it shows reversal. Usually a correction like C must be 3, and the 3 is 5. 1, 2, 3, 4, and 5. So there could be reversal. But the reversal is not showing yet on the 15 minutes. It's not showing anywhere. Reversal really is not showing anywhere because we have very strong negative momentum on the 4 hours. And therefore, I wouldn't go for a reversal. Reversal here shows all the way to level 1, 118,000, 117,500. But it is possible. But I believe the first leg takes us to 113,800. Seriously, we may get a retraction, shoulder level, and then continue higher, or we may just get a crash. This can come a 4. It has done, like we're showing, an A, B, and a C. Bingo, crash down to break the market bottom 103 and proceed lower, possibly like we were showing 99, these kind of levels. All right, so the first move is to 113. We can take a long there because we are at 109 to 113. We are looking at $4,000. I believe it's a very, of course, very lucrative move. And then we are going to get a short, or possibly. If we have suddenly you find that you're getting a trigger to the downside, then of course the market doesn't really have to go to 113. It may just go to 111, 112, end of story, and there's going to be a crash. All right. This just reminds us that 107,500 was always expected to be a bounce because it's inside of a level 1. Level 1 to A to B to C, so there must be a reaction here. All right. A reaction to shoulder levels is really 112. So it doesn't have to be level B. Right. So we can have A here, we can have B here, and we have a C, and this is what we will see on the next chart so that we are not confused. All right, here we have 45 minutes, and we're looking at a bearish scenario. That A, B doesn't have to go all the way to 117, 118. It did 5 swings, have double shoulders now. This is the current leg to the downside. It did the 5 bounce, can take you to 113 because we have 5 swings. 113,500, just a double shoulder. That is all. And then crash. Here it is showing 111,500, 112,000 as a level E. Rejection level E, rejection out of a level 4. And we're seeing, of course, heads and shoulders. Let's take this live on 45 minutes. We have an A and a B, and we're going to get a C. We would want to insert the resistances also. So to know, you're going at least resistance 1, 112,300. You may consider resistance in between resistance 1 and 2 is 113,800. 2 is 116,000. So of course we will consider level 3 and of maybe spike into level 3. Spike into level 1 is 113,000 against 700. Relevant to this level 1, this is 100 and 12,000. Many levels, naturally. Okay, we take a trigger. The best would be actually really to take a trigger, because at this point, market is not really very decided. So if we have a trigger to the downside, end of story. We have an A and a B, and C drops down here, and it is really is like leg 1 to A to B to C, and we're getting a 3 right away. If we have a trigger to the upside, you are looking, I'm talking about a 5 and 15-minute trigger, not a 45-minute trigger. If you have a trigger to the upside, becomes easy, take it to maybe 113, 112,700, close out, because you're getting a 4A, 4B, and 4C. For A, of course, 4B and 4C, and 5 is not there yet. I don't think so. Sorry, 5 is there. This one. Sorry, at that point, 5 would not be there. So this is right. So it depends on the trigger. And I don't think we are going to get a trigger. Not on the 15 minutes. It doesn't look like we're going to get any trigger to the upside, at least. What about the 5 minutes? Doesn't also look like we're going to get a trigger. All right. But if we find that we're moving higher here, we actually have a trigger. You may not see it, but it is there. Okay, what kind of trigger? We have an internal 1 and a 2. You have a bounce if the market, but you're beginning to become negative. If the market bounces level 1, we can have continuation to the upside. There is also a cycle extreme. If we break level 1, we are not going anywhere, but to the downside. If we break level 1, we are seeing, of course, double heads. We're seeing neckline. Right, we are seeing something like a 1 and a 2 and a crashing 3. If you see momentum, degree 3 negative momentum, this is a 1 and a 2 and a 3. You get to see this. Not a 1 and a 2 and a 3 to the upside, but a 1 and a 2 and a 3 to the downside. Simply short market, and the hedge is above the top of support 2 here. All right, so it's best that we go with the trigger, because this is what will set us into directional volatility. Keep in mind that we must be patient, meaning if I'm getting a C to the upside, I can get a dot 1, A, B, and C dot 2, and then I'm still moving higher into market will always attempt to throw me off the breakout. Maybe we retract, have a dot 2, and then we break out into dot 3, and the whole thing reverses, of course. Very complicated. We really just need to take the trigger. Seriously, just focus on taking the trigger over the coming, I believe, 12 hours, 18 hours. We can even have an alert if we break above overbought. We're going to have an alert if we break below oversold, and then check whether this is a trigger to the downside. Alert on the 5 minutes, alert on the 15 minutes, both. And then it will become clear whether this has resolved this way, or we'll still do it till C to the upside. All right, either case, I don't think we're going above 113. I really don't think we're going above 113. before we continue either to consolidate or move lower to even 103,000. And the bias is for a bearish market. The bias is for risk aversion. Remind ourselves that we are not seeing any positivity on the 1 hour, way below the moving average, and of course on the 2 hours traction, and on the 4 hours.